Are you thinking about claiming your overseas travel as a tax deduction for your business? Well, it's possible, but only if you follow some strict rules. Here's the thing, claiming overseas travel as a tax deduction can save you money, but you've got to get it right. In this video, we'll break down what expenses you can claim, how to handle family travel, when a travel diary is required, and how to apportion costs when mixing business and pleasure. Whether you're planning a work trip or just curious about your next overseas adventure, I've got you covered. Not every overseas trip is tax deductible. In order for your travel expenses to be allowable tax deductions, the primary purpose of your trip must be business related. That means attending conferences, meeting clients, conducting research, or taking part in work-related training. You guessed it, if your trip's mainly a holiday with just a little business on the side, you can't claim it. Let's look at some common expenses: airfares, airport transfers, accommodation, meals while traveling for business, incidentals like phone and internet, conference fees, and business-related travel insurance. But remember, these are deductible when they have a business purpose. Stick with me, and I'll explain that in more detail. What about family members traveling with you? Here's the thing. Bringing the family along doesn't automatically void your deduction, but it makes things more complicated. You can't claim your family's travel expenses unless they're also working in the business and the trip is work-related for them too. And taking your family on a trip signals to the ATO that the trip might actually be for leisure. Let's face it, most of us don't take our family to work. But if the main purpose is business, apportionment of costs might be appropriate. For example, if you book a hotel room for a business trip that costs the same whether or not your partner joins you, you can claim the full amount. But if you upgrade to a larger room to accommodate the children, only the cost of a standard single room would be deductible. And you can't claim your family's airfares or meals at any time unless they also work in your business and meet all of the rules. Now, when do you need a travel diary? If you're heading overseas for 6 or more consecutive nights, you need a travel diary. Unfortunately, this part is non-negotiable. It's a hard and fast ATO rule. The diary should include the date, time, location, and nature of each business activity. Make it as detailed as possible because the ATO won't accept vague entries. Be careful. The ATO will cross-reference your travel diary entries with your credit card activity, so be sure that these line up. And here's the thing, if you spend more than 4 hours in a working day on business, you can claim the whole day. For instance, if you're at a conference from 9 a.m. to 3 p.m., that's a business day, you can claim accommodation and meals for that day. But if you spend an hour in a meeting and the rest of the day sightseeing, the costs for that day are not deductible. Now let's look at airfare deductibility. Heads up, the ATO looks at the primary purpose of your trip. If your trip is mostly business, like 9 days out of 14, you can usually claim the full airfare. But if it's a 50-50 split, you'll need to apportion the cost based on business versus private days. And if it's more than 50% private, its primary purpose is private, and no part of the airfare is deductible. If your trip includes both business and pleasure, you must apportion costs. Calculate the number of business days versus private days to determine how much of the costs you can claim. Only claim accommodation and meals for days that qualify as business days with 4 hours work. And what are the substantiation requirements? You guessed it, of course you need records. Keep receipts, travel itineraries, conference schedules, meeting notes, business cards for people that you met with, and importantly, your travel diary. The ATO won't just take your word for it, so have everything properly documented. One of the biggest mistakes is trying to claim the full cost of a mostly personal trip. Another is failing to keep a travel diary for trips 6 nights and over. Don't include family expenses, don't claim vague business days, and always apportion correctly if mixing business with personal time. Now be careful. The ATO is getting stricter with travel deductions, so make sure your records are watertight. Getting it wrong can result in hefty penalties and rejected claims. Now, spending money on an overseas trip might sound appealing, and it can be a positive thing if it works with your overall plan. It's really important to set business goals, and an overseas trip can be part of that. So watch my next video on setting business goals to help your business grow. If you would like some further tax support, visit our website and download our free guides. The link is in the video description below. And that's it. Now you know how to make the most of your overseas travel while staying compliant. Follow these guidelines to claim what you're entitled to without crossing any lines. If you have any questions, pop them in the comments and I will do my best to get back to you.